Good morning, traders. It's Monday 10th and it's 9 o'clock in the morning, and we are looking at the stock market. Let's get started. Quick disclaimer that this is just how I see the markets. This is not a recommendation to buy, sell, or hold any securities. Today, I want to talk about some questions and answers that people asked, and I want to explain how actually the whole system works. So let's start with the charts first. I pulled up just a blank chart here. As you can see here, this is a Canadian Natural Resources, and it's a 1 month long chart. Okay, so we're going to start with what I call chart hierarchy, right? So basically, which chart is more important than the other one. So we have a long-term charts, which is like a monthly, weekly, and daily. And then we have a short-term charts, which are 4 hours, 1 hour, 2 hours, 3 hours, whatever, 15 minutes. Some people even trade off of a tick charts, right? I'm already touching on one point that I wanted to discuss today. What is a trader and what is an investor? Well, trader is somebody who finds these opportunities on the charts and take advantage of the market conditions at the moment on a short-term basis. Basically, a trader can be in a trade for a day, a week, or sometimes 2-3 weeks, okay? And then get out of the trade with a profit or loss. One thing to understand in the whole trading strategy is basically nothing is certain 100%, and nothing is ever 100% in a market. So you cannot expect to have 100% results. Nobody has 100%. So let me just be clear about that. It doesn't matter what kind of strategy you use. It doesn't matter how much research you do. 100% is not achievable. That's just not possible. So as an investor, you would research the company and you would see maybe the potential out of it, and wouldn't bother about the charts and stuff. If you see the potential in stock, you would invest and sit on it. Well, for me as a trader, I like to take short-term profits and reinvest in something else that I see as a good opportunity to jump in. This is where the charts come into play, and this is why I look at the charts, and this is why I use technical trading versus the fundamentals or research trading as many investors use. All right, as an investor, you can also use the charts to buy these dips in the market. I'm going to talk about chart hierarchy. Chart hierarchy means which chart is more important than the other. Is it possible for us to trade off of these charts? Yes, you can place the trade on any chart. If you are looking for the signal to get it on a monthly chart, then you stick to the monthly chart and you move on with the monthly chart. You have to also understand that the charts will not be moving, the candles will not be developing that fast, because each candle takes 1 month to develop. So basically, nothing, as I said, nothing is 100% in the markets, and you cannot expect for a market to do what you want market to do at that point of time, all right? But we can be educated as far as our approach to the markets, and we can calculate the risk and rewards, and we can calculate these areas where we can buy and be in a very good position to be positive in every single trade. So moving on from there, I have this very much blank chart here, just showing you why importance of the charts is very, very significant to us as traders, as technical traders. So let me just start it here. So you can see these peaks and valleys. Market is just basically going sideways. Each one of these candles is monthly basis, and these candles are very long-term candles to trade. So if I would look at this market here, specifically this Canadian Resources, I would see this 1, 2, 3 times market got stuck in this limbo here. So I would mark that kind of stuff here, okay, just to see how far this is going to take us. Market came here once and twice, so we're finding our support and resistance at this point of time, and this is a very significant levels on the monthly charts, definitely the most significant ones, okay? And if we always, as I always explain, we are always looking for the support and resistance closest to the price. So the closest to the price is always on the right side. and we can see this little tiny line that goes across the screen. So that's the price that's currently available to us to see, and 41.58 is the level that we are looking at right now. So if I would to find the support and resistance, in this case resistance because the market is climbing, this would be a resistance because the market stopped here. And let me just adjust here. So this would be the resistance area here. So at 42.52, we can see the market stalled once, twice, three times, right on the dot. If I put my crosshair to that, the high of this candle is 42.50, and high of this candle here is 42.55. So 5 cents on a dollar. It doesn't make much of a difference on a monthly chart. Okay, and then finally the last resistance for us would be around this area here. We can see the market stalled a couple of times, and here we go. Okay, so once, twice, three times, four times. This is on a monthly basis, so we know that this is a very significant area. Yes, we peaked a little bit through here, but right away in the next month we just fell down underneath this 46.74 area. So this is now support and resistance levels, the most important ones that we can look at, okay? And as you can see, many of them correspond to each other, right? If I just take my tool for a second to explain. Take a look at this. Once and twice we stalled at the same area, and when the market finally broke down, okay, we come back here and, well, you can go through it. And you can go through it with this candle. Was not able to close on the other side, and then finally we have a close, very poor close on the other side. So this is just basically indecision candle, and then bears push the market down again. So we know that this is 30.03 area, very significant, very significant support. So we know that to look for the price to stall at that area for sure. Okay, once again we have 1, 2, 3 stalls here, and we can see one candle not able to go through, second, third, fourth, then the fifth one here is kind of peeking through it. Well, he went on the other side but closed the price below that line, and then we finally had a fake out, market comes down, and another attempt here, and then look how this candle closes the body right here, but this one, when it opened, it went all the way to the top. Bears were not able to close the price below, and you can see the candle is sitting right on that line, another candle right on that line, and then we finally fall through it. Okay, another attempt here. I mean, we finally broke up above this 37.23 area here, so with this candle here. Okay, and then you have this one. We have a retest, and where does it stop? Look at this, right on the dot, right there. And then it takes off right on that spot as well. So you see how significant the support and resistance areas are. Okay, so if I would just look at the 1 or 2 hour charts, I wouldn't see these very significant areas. So now that we have all these marked on the monthly chart, we can move on to the weekly chart. I'm going to just switch to the weekly chart and take a look what's going on over there. I'm also going to squeeze the chart to see what's going on there. All right, I mean, we always look at the support and resistance areas closest to the price. So price is right here. So we need 3 things to trade, and 3 things are, and I'm going to remind you once again, we need a trend. Trend is to the upside, guys, from left to right. So from left to right of the chart screen, we can see that in the short term, at the moment, we are rising. The market is rising, so we are in a bullish trend at this point of time. Okay, the bulls are definitely in control. We have this typical swings up to the upside. These are swings, and we are moving on into a bullish move. Okay, so let me clear this. So that's the highest peak in the recent weeks. All right. So if we would go by this and not knowing that this candle here, that this line exists here, that's, let's say we didn't mark that on the monthly chart, okay? So we only have this data here. If you're just looking at this here, okay, fantastic. We have a couple things on the chart here that we can mark. First of all, we have a trend. We can see from left to right the market is going to the upside. So yes, we are looking to buy in. Okay, we can see the market was going sideways here. Okay, so yeah, that's great. You know, market was squeezing the price, and then finally we now have a breakout here. We also have a resistance. This is the resistance. This is the highest level that we can see that the market stopped at after before going into this consolidation, and now we finally have a breakout. There's a beautiful breakout here with this gorgeous candle here, and now we have a retest. We have the retest of this level. Market went up. I always explain the market goes up, it comes down, it retests the level to make sure that this is actually a significant level and we can move on. And yes, this is exactly what's happening right now on this chart. And we had a retest, so you can see that the candle's wick. So the wick of this candle, this is the wick, okay? So this is the body, and these little lines here, those are called wicks, okay? And that shows us the power of buyers or sellers, you know, who is more in control. The bigger the body, the more these entities are in control. In this case, bulls are in control definitely with this candle here. Bulls are definitely in control here. Bulls are definitely in control. And then we have also bears in control, and so on and so forth, okay? These wicks, however, on the other hand, they show us the strength and weakness of the levels, these levels that we marked. So we know this is a significant level here, okay? We know that the market finally broke through this level here with this candle. So this candle closed the price above, okay? And now we came down to retest it, okay? So we can see the bears push the price down. We can see, so the wick is telling me this. Bears were in control at one time. They pushed the price down below this level. However, the bulls are definitely in control and they're pushing the price up. So this wick is telling me, yes, at the moment, in the past, the bears were in control. They were pushing the price down. They were not able to hold it. And now the bulls are taking control. The bulls are taking control and they're pushing the price up, okay? So the price now, or the body of the candle, is above this line, and we are looking to buy into this market, okay? So now I'm going to talk about later, you know, how to refine these entries, okay? So yes, so we know the breakout happened on the weekly chart. We know that we have a retest. Fantastic. We have all the things that we need to trade. So we have the trend, we have the resistance that's broken now. Finally, market broke out. We have a retest. All we are looking for is the signal, okay? So now, if we did not mark these levels on higher charts, okay, and if we did not squeeze this chart on a weekly chart to take a look how far we can go with this trade. If you were just looking at these little pictures here, okay, if you were just looking to trade by looking at this little part of the chart, as we did, we just enlarged this part here. I think this was included, okay. So we just enlarged this part here by stretching the chart. Okay, we knew that the market is in the upside. We knew that there was a resistance. We knew that the resistance is broken and market is retesting this level. If we were just looking at this part here, we would not see this. Take a look at this, okay? Take a look at this, okay? Take a look at these two significant marks on the chart that you would not see if you were just focusing on this little part. This is very important. This is why these higher level charts are more important to find these support and resistance areas in order for us to trade, okay? So yes, this would be a great opportunity for us to trade, but however, stop right there. Okay, let me mark this first here, okay? Take a look. If I would mark these two levels here on the top of this candle here, top of this candle here, this is as far as the market went in very, very long time. We saw these peaks on the monthly chart too. Now take a look at the opportunity for us to trade. Okay, so now we have this line marked. We were looking only at this picture if we were just focusing on this little area what's going on on the market. Now we have a breakout here. Let's say you find a signal at 4103. 4103, let's say signal develops on a 1 hour or 2 hour chart. Okay, your opportunity to trade or your potential for profit is only up until 42.51. Okay, so it's about $1 to jump into this trade. Risk a lot to just jump in and jump the gun or pull the trigger, and then just to make maybe $1, because we know that this 42.51 area is very significant. So we have to take a look at the past. It is important. However, this past also gives us a great opportunity to find out how far we can go. Where's our potential for profit? So now you know, if this is your entry, your potential for profit is this top here. Okay? And this is how you measure stuff. All right? Investors don't look at that kind of stuff. They don't really care. You know, when they find a good opportunity after research, fundamental research of the company, they just jump in and they continue on over there. So talking about the signals, all right? We are still on this chart. I'm not trading this stock. So, and I'm also never giving you an advice to buy, sell, or keep any securities whatsoever, okay? I'm just teaching you how to find these opportunities, how to be educated in the market, all right? So now you know that by focusing on a small picture like this, okay? Small picture like this could get you in trouble very fast. As a trader, okay, if I were to trade on a daily basis, on a smaller time charts or time frames, that's a great opportunity for me. Like, I have no problem trading for $1. Some people can invest a huge amount of money so you can cover the entry with a huge amount of money, and $1 in the market, well, it makes a huge difference in your profit, okay? But as a long-term investing, okay, or in long-term, trading, you cannot, or you would never jump into the trade like this. This is why I say, like, these kind of trades are scrapped, because the level or how far the market can go is just too close. All right. So let's take a look now. If I switch down to a daily chart, let's see now what's happening on a daily chart. Same level. All right, same level. We can see this was the highest point of the chart here, and we can see the market broke out beautifully, and now it's retesting it. Beautiful, beautiful candle here, beautiful retest, but no signal on the daily chart. No signal on the daily chart. We just see the breakout, which is totally fine. Let me just readjust here to the top exactly of this candle here. There we go. All right, so you can see the top is covered right there. Okay, so we only see on a daily chart a beautiful breakout and retest. No signal for us to trade, okay? If I go down now to 4 hours, I can again see this beautiful breakout here, beautiful breakout, but this time I have the signal. And where's the signal? Well, take a look, okay? How did we break out? Okay, so we can see the market was rising here, okay, and developed this candle here. This is this little candle here, and then just before we hit this 40.01, this huge engulfing candle developed, engulfed the previous candle, and that's called, this is one of the signals that I'm looking for usually, all right? This is called breakout with a bullish engulfing candle. It basically completely engulfed the previous candle and just broke out on the other side, okay? How do we trade this signal? Well, once the top of that candle here is broken, you're in the trade. Yes, the market came down and it's retesting, that's all great, but your trade is right here, okay? So your entry into the trade is right here on top of this candle, okay? You don't need to wait for the market to come down here and retest. No need with this kind of a breakout, okay? So we're just focusing on this trade right now. Now, take a look, the size of this candle, all right? So this size of this the size of this candle, all right? In order, as a trader, in order for me to trade, I need to know where my stop goes. So if the market goes against me, so if the price starts falling down, okay, and I was in the wrong, where am I going to be stopped out? My stop goes below this candle, my entry candle. This is my entry candle. This one here is an entry candle, okay? This is entry candle. My stop goes below the entry candle. Okay, so if the market starts coming down, it's going to take me out, or I'm willing to get out at this price, 39.80, let's say, for example. All right, and I also want to know how far is, so what is my potential for the profit? Okay, so if we look at the profit from 41.45, so if my stop, I'm going to just use this as a tool. So this is my stop. This is my stop, 39.77. This is a stop below this candle, entry candle, okay? This is my entry here on top of this candle. So 41.53 is my entry. 42.53 is my potential for profit, okay? So I have basically less than a dollar. Okay, let's say it's a full dollar. Let's say it's a full dollar to get into trade, okay? So measuring from here to the top of this, well, where the resistance is located, right? We have $1 potential to make a profit, okay? If we were to jump into this trade. My loss would be greater than my profit if I would take a look, because from 41.53 to 39.72, it's almost $2. So this candle is almost $2 worth of me losing in the market instead. And so this would be 2 against 1 in a losing trade, right? So if I lose a trade, I would lose twice as much as I would gain if I actually was positive, all right? So that's a definitely scratch trade. I would never jump into something like this, even though the signal is beautiful and everything. But my potential for the trade here, my potential for the profit here is way less than my risk. My risk is this. This is a risk. $2 is a risk. $1 is a profit. Okay? So this is how we measure how much, if the trade is profitable. Okay? So this is $1 against $2 of profit. So $1 of profit against $2 of loss. All right. So if the market from this point on starts falling down, I lost $2. If I win, I'm gonna win $1. See the difference? So now you understand why this whole point of measuring and looking at if the trade is really good or not, and knowing where market can stop. I'm not saying it's going to stop at this point of time, but knowing how far the market can go, you can measure how much you can lose or how much you can win, and is it profitable for you to actually take that trade or not. So I hope this is really significant information that I can give you right now. So we do definitely have the trend perfect. We had the resistance that was broken, now it turned support. We broke it with a beautiful signal here, and we know how far the market can go. We measure now from the signal, from the top of this candle, how far can we make and how much can we lose. Is it profitable for us or not? 1 against 2. So $1 to gain for 2 to lose. As a real trader, or as a profitable trader, you always look for something like this. You want 2 times to win over 1 time to lose. So basically we calculate it as 2 to 1, at least the risk reward ratio. This is called the ratio, okay? So we want to see twice as much profit over 1 of a loss, right? So twice as much profit over 1 of the loss, right? So if I would invest $1 into the market, I'm willing to lose that $1 in order to get $2, okay? Except in vice versa, this is just a scratch trade. This is definitely not gaining $1 and losing $2. Makes no sense whatsoever. So Yes, you have everything. You have the trend, you have the resistance that's now turned support. You had a beautiful signal to jump into trade, but there is no trade here because the market is too close, the resistance is too close, and nothing is more important than keeping your profits. Okay, so moving on, let's switch now to Royal Bank of Canada, and I was looking at a daily chart. We already have these these support and resistance levels marked. You're gonna ask why this is not marked. Well, I'll explain in a moment. All right, because there are a couple of reasons for that, and the main reason for that is if we can see the market was moving here. Okay, on the weekly chart we marked this because market stopped twice before in the past. All right. So we exactly stopped at that level here. We're not able to pass through that level. We're not able to pass that level. And once we did pass here, we had this kind of a scrambling around this area, and then the market took off and then went straight back into this consolidation level. This is a consolidation here. Okay. Then we had, as I explained before, we had this retest here. We had this inside bar, and then we had nice, beautiful engulfing bar that was taking us back to this 117.24 area. Okay. I was expecting for the market to come down to 108 here and retest. Unfortunately, it didn't happen, which is totally fine. But now we have this 117.24 to play with. And as you can see here, this candle here came to the top, couldn't break through. Stopped exactly on the dot where the market stopped before. Then we had this one, was not able to break out. And then we finally have a breakout here. And we are just looking for the market. So we have a breakout, pullback. We need to make sure that we don't get this kind of a fake out. So the market comes up and closes back down into this consolidation area, right? Which market did not. Okay, with this candle here, we can see the wick is on the other side. We can see the wick is on the other side, and the market just took off from there. So if I enlarge this, you can see the difference here. When the market broke out here, and as it was coming down here, this huge candle, bearish candle, just went straight through that support and closed on the other side. Difference here is when the market broke out this way, okay, again, this 117.24, this candle here actually did not break through, did not close the price on the other side. It peeked through with this little wick, but never closed on the other side. And then we had the market move on. So definitely 117.24 was a great area for us to mark in order to find the trade. Now let's try to refine this trade. Okay, so refine the entry. All right, so we know that daily chart is our good chart to look for the trade. We are also looking for a good entry, so something that could give us that risk-reward ratio, so we can actually trade into the market. Okay, so what we can see here, this is the last peak that the market made, so 118.88, and we are looking to trade from 117.24. So that's almost $1.50 worth of trade for us to get into this Royal Bank of Canada. All right, so I'm going to try to refine the trade here. So I'm going to go to 4-hour chart and take a look what happened here. Okay, and we are at the same level here. You can see all this struggle to go through this 117.24. When we came down here, we got this nice little kind of a doji, so telling us that the market is rejecting this level, and the market is taking off. However, no signal yet. No signal. We're going to go down to 3 hours and take a look. On 3 hours, you get this doji that's rejecting the level here, and then after doji, you have this beautiful, beautiful pin bar here. This is a pin bar. I know the body is red, but it is a pin bar, and it's rejecting this level. So the entry into this trade is 1756 to gain up to 118.88. The top of this trade here is 118.88. Okay, so the difference between that trade and the one that I showed you over there that was a scratch trade is this. My stop for this trade is right here, which is 117. So I'm risking 24 cents on a dollar. Okay, so my entry into this trade is right on top of this candle. So take a look at the profit. This is the profit for me to be made, and this is the loss, the length of the candle. Okay, so if I would get in here at 1750, the top, look at the risk reward ratio now. So we have now 2 to 1 risk reward ratio. I'm risking the size of this candle here, okay, to get stopped out in order to get twice as much into the market, because I know where the market can stop. Okay, I can see where the market can stop. In this case, this worked out great because the market just took off and just took off from there. That's basically what it is. And we also have a beautiful signal here to continue on trading. But anyways, I'm showing you that this is risk reward ratio. This is the risk reward ratio. We measured it now, and this is a definitely positive trade to take, okay, versus the one that we looked at on that Canadian Natural Resources, which was a scratch trade. Definitely not worth taking because the signal that we were getting was not good enough for us to jump into the trade at all. Okay, so this is how you measure how far and what you can do with the trades. Okay, so this is how the trading works. Basically, we need to find these support and resistance levels. We know then that this is how we measure the market. We know exactly how far market can go, okay, before it's going to stall. We know where the market can bounce, basically. So if it comes down, we are waiting for the market to bounce from these areas. These are the dips that we are trying to buy into, okay? We are also looking to see where the market is going. We are looking from left to right to see what the trend is. The trend is, in this case, positive or bullish, okay? So now when we have three things in one, in favor, okay, which is the trend, which is resistance and support, okay? So resistance and support. And we finally have a signal from that area. We also measure our risk reward ratio. So this is our risk, this is the reward, okay? So if that calculates at least 2 to 1, okay, in your favor before you get into trade, that trade is worth taking, okay? If you have $1 to gain and 2 to lose, that's a scratch trade. I would never take that, okay? So three things, as I said: trend, support and resistance, and signal. We need a signal. And then on top of that, we calculate our risk reward ratio. Is it worth for us to get into a trade? And in this case, definitely worth to jump into this trade and look at the profit. So that's definitely 2 to 1. After this breakout here, this is a breakout right there off that top of this one here. Let me clear so you can see it. So this was the top. This is the highest level. This is the highest level market stopped here. We pulled the line because we don't know anything else in the past where the market used to be. All right. From here on, we know that market broke out again. This is a breakout candle here of that level. We had an inside bar which also touched this line here. So it's retesting it, but it's also an inside bar inside this candle here. Okay. Once the top of this candle was broken, you are definitely into trade again and you're moving on into positive. Okay. So if you were in a trade here, you could have just pay attention to what's going to happen at this level here. And if you would to see this kind of a pattern, all right, you can just stay in a trade or take some partial profits from here, from this area, and let some profits continue on into positive direction. The problem with the Royal Bank at the moment is we haven't been in this area before. Okay, so we don't know how far the market can go before it starts dropping to retest any of these levels. All right, so that's the lesson for today. I know I didn't cover too much. I'm just going to touch on Air Canada at the moment. We know that we are in a positive on Air Canada here. I'm going to just take a look what the market is doing today. So on Friday, we had this beautiful candle also developed here. We had on weekly charts this was that pin bar that developed, and this is where I took the trade. Okay, the market came down to retest, so it was not a scratch trade, because if I look at this length of this candle and look at the profit that I can make, this is the profit we can make. Okay, so that's definitely 2-to-1 risk reward for me ratio. So this is 1 and 2, so this is a 2-to-1 for me risk reward ratio in order to make a profit on Air Canada. Okay, so if you have not jumped into this kind of a trade, like me, I was looking on the weekly chart, so my trade is still on the weekly chart. There was a great opportunity on Friday here to jump in on this bullish candle here. We had the retest the day before, and you can see this little doji candle here, and then we have this beautiful engulfing candle. And once the top of this candle this morning was broken, okay, the market is continuing on into a positive. Okay, so another entry here on Air Canada. We are definitely moving in the bullish direction. Okay, so that's how I see Air Canada. Definitely the target is 28 around this area here, and definitely great trade on the weekly charts. And you can look at the you can take the trade on a weekly chart and then go down to a 15-minute chart and manage the trade from 15-minute chart. Basically, it makes no sense. If your entry was on a weekly chart, you're sticking to the weekly chart and you're sticking with the goal of your profit, which is over here at 28.28. When we see these kind of a breakouts or this jump, like a rejection of the levels here, then you can go down to the smaller time frame and look for the better entry into the market. So better risk reward ratio. Let's say on a 1 hour chart, you found our nice, beautiful pin bar right here, which was this kind of size. Okay, so your entry would be here versus here. So take a look how much more profit you can make from that level. You're still trading on a daily chart. You just entered on a better signal on a smaller time frame, and your stop loss would be, well, this is your risk. Okay, this is your risk, and this is your reward. So think about this would be like maybe 4-to-1 risk reward ratio if you found it somewhere on a 15 or 20-minute chart, 1 hour, whatever. Anyway, small time frame when you were looking for this rejection level entry. So that's how you trade. This is maybe a longer video today, but I wanted to explain exactly what's going on and how we measure as a technical traders, how far we can take the trades, why I say some trades can be scrap, and why trades are great, why some trades are great to take. I touched upon entry and exits, so we definitely know how to enter the trade. We know definitely where to look for exits and how to manage the trade. Now I explained to you how to manage the trades if you're a technical trader. Also, if you're an investor, if you're looking on the weekly charts, like me, I'm looking on the weekly chart. I jumped in on the weekly chart, and I'm going to manage it now until 28.28 level. That's my target. Definitely 2-to-1 ratio trade, and moving on. And if it turns out that the market turns around and stops me out, yes, I'm always willing to lose the money. That's a part of the game I'm in, and I understand the risks. And the risks are always calculated for me very specifically. As you can see, I also showed you these very, very secret tricks of how actually market is measured, and how you can actually find these or refine these entries and know if the trade is actually good or not good to take. This is Sasha. I hope you enjoyed the videos. Please do smash that like button. Please do subscribe to my channel. These kind of information you are not getting anywhere else. Nobody talks about this kind of stuff. And if you want to learn more, please come back to my channel. Bring me more subscribers. I'm happy to see more people are signing up for the channel. Thank you for watching my videos. For today, this is Monday, May 10th. I'm going to conclude this video. Thank you for watching, and this is Sasha. Peace out, take care, and have a wonderful day or week trading.